sales and collection cycle, and there are two things that we will discuss in this topic, which is the first is sales transaction and second is cash receipt. The occurrence is where all recorded sales actually occur and require. The audit objective of this assertion is to check whether all recorded sales actually occur and require. The class of transaction and relevant account that related to this assertion is sales account, sales return and allowance, and account receivable. Internal control is each sale transaction is supported by the necessary document such as the approved sale, order, shipping document, and invoices. In the audit procedure, there are two types, which is test of control and substantive test. The test of control, it is examine sales invoice for supporting bills of lodging and customer order. It also checks sales agreements such as sales, detail file to invoice, supporting shipping document, and customer purchase order. In the substantive test, it account for a sequence for sale invoice. In the audit evidence, there are four types of evidence, which is first is sale invoice, second is customer purchase order, third is delivery notes, and fourth is sales invoice. Possible misstatement of occurrence is sales and receivable account might be overstated or understated, and second is the uncollectible account receivable might have not been provided.
Okay, so we move on to the second assertion, which is completeness. Completeness means that all existing sales transactions are recorded completely and in a respective account. The audit objective of completeness is to check whether all sales are recorded completely. There are four classes of transaction and relevant account. The first one is account receivable, the second one is sales, the third one is cash discount taken, and the fourth one is sales return and allowance. So, what should the company do in order to make sure all sales are recorded completely? So, the internal control of the company need to make sure that the invoice, the shipping document, and sales order are pre-numbered and the numerical sequence are checked. There are two audit procedures that need to be done by the company in order to make sure that all sales transactions are recorded completely. So the first one is test of control. The company need to check the numerical sequence and completeness of delivery notes and also sales invoice. The company also need to trace the sample of delivery notes to the related sales invoice and entries in the sales day book. The second one is substantive test. The company need to trace the delivery notes and sales invoice to entries in sales day book and debtors ledger. The audit evidence of test of control are delivery note, sales invoice, and sales day book. Meanwhile, for the substantive test, the audit evidence will be sales invoice, debtors ledger, and also sales day book. So, the possible misstatement of completeness is sales and receivable account might be understated or overstated. So, the second one is the uncollectible account receivable might have not been provided yet. And the third one is misstatement in account receivable and related income statement account.
The third assertion is accuracy, meaning recorded sales are recorded accurately. The audit objective is to check whether all recorded sales for the amount of the goods shipped are accurately billed and recorded. Class of transaction and relevant accounts are sales, account receivable, bad debt expense, sales return and allowances, and cash discount taken. Internal control. Sales are supported by authorized shipping documents and approved customers' orders. Batch total of quantities shipped are compared with quantities billed. Unit selling price are obtained from the price list master file of approved prices, and statements are sent to customers each month. Audit procedure, test of control. Examine the sales invoice for supporting documents. Examine the file batch of totals for initial of data control clerk. Examine approved price list for accuracy and proper authorization. Observe whether monthly statements were sent. The audit evidence for task of control are sales invoice, price list, and customer statement. While substantive tests for audit procedures are trace entries in sales journal to sales invoices, compute prices and extensions of sales invoices to shipping documents, sales order, and customer order. The audit evidence for substantive tests is sales journal, sales invoice, shipping documents, and customers' orders. Possible misstatement. Sales and receivable account might be overstated or understated, while overstatement or understatement of sales return and allowances.
Next accession is cut off or timing. Sales are recorded at the correct dates or period. This accession objective is to check whether all sales are recorded in the correct date or period. Class of transaction and relevant accounts for this accession are sale, account receivable, cash discount taken, sales returned and allowance, and also bad debt expenses. The internal control is shipping documents are pre-numbered and accounted for weekly by accountants. They have two audit procedures which are test of control and substantive tests. Test of control review document for unbilled shipments and unrecorded sales and compare the date on delivery notes, sale invoice, and entries on sale journal. For the evidence, they use delivery notes, sale invoice, and sale journal. Next is substantive test. Compare dates of recorded sale transaction with dates on delivery notes. For the evidence is sale transaction and also delivery note. The possible misstatement for cut-off or timing are recorded sales in the wrong period and dates of sale transaction did not match with delivery notes.
Now we move to classification assertion. Where the classification assertion is all the transactions recorded in proper accounts. We move to classification objective, where to check whether all transactions have been recorded in the proper accounts. There is 5 classes of transaction and relevant account for the classification assertion, where number 1 is sales account, number 2 is account receivables, number 3 sales return and allowances, number 4 cash discount taken, and the last one is bad debt expenses. Now we move to the classification internal control, where account classification is internally verified. Now we move to the classification of audit procedure, where there is two types of this audit procedure, that is test of control and substantive test, where the test of control is to examine documents package for the internal verification, and for the substantive test is to examine duplicate sales invoice for the proper account classification. Now we go to the audit evidence, where for the test of control, the audit evidence is the document package, while the substantive test is the sales invoice. As we know, in every transaction, we will have a misstatement. So, the possible misstatement for this classification assertion are: number 1 is when we wrongly classifying the credit sales into cash sales. And the number 2, when we wrongly recorded the customer detail in customer statements.
Now we will move to the cash receipt, and I will explain the first assertion, which is occurrence. The occurrence is all recorded receipts for cash are actually received by company. The audit objective is to check whether the recorded receipts for cash are actually received by the company or not. The class of transaction and relevant account that related to this assertion is collection on account from customer, receipt of interest, dividend, investment for owners, and cash sale. Internal control for the occurrence is control procedure, which is accountant independently reconciles bank account and batch total of cash received are compared with computer summary reports. For the audit procedure, there are two types of audit procedure, which is test of control and substantive test. Test of control is where observe segregation of duties and observe independent reconciliation of bank balances, while the substantive test is review cash receipt journal and master file for unusual transaction and amount, and it also tracks cash recipient entires from the cash recipient journal entry to bank statement. The audit evidence is cash recipient transaction file, pre-listing of cash recipient journal of or listing, purchase order, customer invoice, reconciliation bank statement, cash recipient journal, and master file. The possible misstatement of this assertion is the company might not receive the cash receipt.
So completeness in cash received suggests that all existing cash received has been recorded. So the audit objective is to check whether all cash received has been recorded completely in the cash receipts account. There are 5 classes of transaction and also relevant account. The first one is receipt of interest, dividend, bank book, cash sale, and also account receivable ledger. So of course, there are a few internal control that can be done by the company in order to make sure all cash receipt has been recorded completely. The first control procedure is pre-listing of cash receipt is prepared. Second one is checks are restrictively endorsed. So the third one is batch total of cash receipt are compared with company summary report. And the last one is the statement are sent to customer each month. For audit procedure, there are 2 tests that need to be done by the company, which is test of control and also substantive test. For test of control, the company need to observe the pre-listing of cash receipt. They also need to observe the endorsement of incoming check. The third one is the company need to examine batch totals file for initial of data control clerk. The audit evidence of test of control are pre-listing of cash receipt and also cash receipt journal and listing. For substantive tests, the company need to obtain the pre-listing of cash receipts and trace amount to the cash receipt journal, testing for names, amounts, and also debt. And the company also need to compare the pre-listing with the duplicate deposit slips.
The audit evidence for substantive tests are pre-listing of cash receipts and cash receipts journal or listing.
So we move on to the possible misstatement. The possible misstatement for completeness in cash receipts are cash receipts might not be recorded by the company.
The third assertion for cash receipt is accuracy. It means cash receipt occurred when cash receipt is recorded at the time of deposit and recorded at the amount received. The audit objective is to check whether all cash receipt deposited and recorded at the amount received. The class of transaction involved is bank account and account receivable. The internal control of accountant independently reconciles bank account. Batch totals of cash receipts are compared with computer summary reports, and statements are sent to customer each month. The audit procedures for test of control are: observe whether accountant reconcile bank count, examine file of batch total for initial of data of control clerk, and observe whether monthly statements are sent. The audit evidence for these test of controls are purchase order, receiving report, and customer invoice. The audit procedure for substantive tests are: obtaining pre-listing of cash receipts and trace amount to the cash receipts journal, testing for names, amounts, and dates, prepare proof of cash receipts. The audit evidence is cash receipt journal. The possible misstatements are: the amount received from cash receipts that have been recorded are understated or overstated. Misstatement of amount in cash receipt in the transaction.
We continue with next session, which is cut-off or timing. Cash receipts are recorded at the correct period. The objective for this session is to check whether the cash receipts are recorded at the correct period. Class of transaction and relevant account is collection on accounts from customers, receipt of interest, dividends, rents, and cash sales. For the internal control, procedure require recording of cash on a daily basis. They have two audit procedures, which are test of control and substantive test. The test of control for cut-off or timing is examine of control for daily deposit of cash receipt and review of bank reconciliation. The evidence for this procedure are purchase order, receiving report, customer's invoice, reconciliation of bank statement, cash receipt journal, and also pre-listing of cash receipt. For the next procedure is substantive test. Compare date of deposit per bank statement to the date in the cash receipt journal and pre-listing of cash receipt. For the evidence, they use cash receipt journal and also pre-listing of cash receipt. For possible misstatement, cash receipts are recorded in the wrong period.
Now we go to the classification assertion for the cash received. For this classification assertion for the cash received, where the cash received transactions are properly classified and recorded in the correct amounts. Now we go to the classification objective, where to check whether all transactions have been recorded in the correct accounts and correctly classified. There is four classes of transaction and relevant account for this classification assertion. There is number one, the receipt of customer, number two, dividends, number three, rents, and the last one is investment by owner. For the classification for internal control is to arrange the cash receipt transaction with correct classification to avoid misstatements. And the number two is cash receipt transaction are internally verified. The classification audit procedure is for the test of control is the trace cash receipt to cash receipt journal for proper classification and review cash book for unusual items. And number two, examine evidence of internal verification. For the substantive test, to examine documents supporting cash receipt journal or pre-listing for the proper classifications. Now we go to the audit evidence. There is the classification of the assertion, where the Tests of control for the audit evidence are customer invoice, receiving reports, and purchase order, while the substantive tests, the audit evidence are the cash receipt journal and pre-listing of cash received. So, for the possible misstatement for this classification assertion is where the cash receipts are recorded in the wrong financial account statement. The last one of assertion is the posting and summarization assertion, where for this posting and summarization is when the cash receipts are correctly included in the accounts receivable master file and are correctly summarized. For this posting and summarization objectives is way to check whether all cash receipts are correctly included in the accounts receivable master file and are correctly summarized.
So, for posting and summarization, there are two classes of transaction and relevant account. The first one is bank account and the second one is account receivable. The company need to do a few control procedures. So the first one is computer automatically post transaction to the account receivable master files and general ledger. And then the account receivable master files need to be reconciled to general ledger in a monthly basis.
Audit procedure test of control. Examine evidence that accounts receivable master file is reconciled to general ledger. Observe whether monthly statements are sent. The audit evidence for this test of control is cash receipt journal.
The audit procedure for this assertion is the substantive test, and it is trace selected entries from the cash received from journal to account receivable master file and test for the dates and amounts. And it also trace selected credit from the account receivable master file to the cash recipient journal and test for dates and amount. And it also uses credit software to put and cross-put the sales journal and trace total to the general ledger. The audit evidence is the cash recipient journal and the account receivable master file.
Possible misstatement for this assertion are overstatement or understatement of account receivable and misstatement in account receivable and related income statement accounts.